From Kansas State University, this is Agriculture Today. Eric Atkinson with you, and here's what's ahead. K-State's Mykel Taylor will share her latest observations on farmland value and rental rate trends in Kansas and where those might be headed in 2019. Then K-State's Gregg Ibendahl will talk about the series of 2019 crop budgets he's worked up for you Kansas producers to use in making crop production and management decisions for next year. Then from USDA Rural Development here in Kansas, Lynne Hinrichsen announces that 5 rural hospitals in Kansas have been awarded $34 million under the USDA's Community Development Direct Loan Program. She'll outline what that will support. And K-State's Gus Vanderhoeven with his weekly commentary on rural Kansas. All that here on Agriculture Today. Agricultural producers, landowners, and creditors, you have a partner in your legal and financial needs. Kansas Agricultural Mediation Services offers reliable, trusted information and guidance. Whether you need advice for ag credit concerns or are transitioning your operation to the next owner, Kansas Agricultural Mediation Services can assist you in making sound decisions for your business. To learn more, call 800-321-3276 or visit us online. Thanks for tuning in. You're listening to Agriculture Today. Mike Side, during our first segment, is an agricultural economist with K-State Research and Extension who's had her hand in a number of important matters to you agricultural producers of late as she's been on the meeting circuit and otherwise. Mykel Taylor is with us once again. And on 2 fronts today, farmland values and the current trends, and on what may be forthcoming with that 2018 Farm Bill, both of which she's been talking up with producers. Mykel, you were recently, among other places, on the crop insurance workshop circuit for K-State and talked farmland values. And give us the synopsis of where those trends stand here in Kansas.
Well, we're looking at land values holding steady right now. I've looked at them through the second quarter of 2018, and so far about 2016, 2017, 2018, we're basically holding steady. That honestly is bigger news than it sounds like. So we want to kind of point this out, is that land values could easily be falling right now when you look at farm incomes and negative cash flows we've had over the last 4 years. But land values are holding steady. And one of the things that appears to be driving it is that the supply of farmland has backed off in the market so that we are supporting prices with just having fewer parcels of land for sale.
Producers simply are not parting with land.
I think there's a lot of uncertainty in the market right now, uncertainty on the part of both buyers and sellers about where it's going to go and how strong it's going to remain in the short run versus the long run. So yes, the unwillingness to part with ground right now because they're not sure that this is the right time, to be buying and selling ground. So it sort of stagnates the market and leaves it flat.
Now, we're talking in generalities here, but do we see this trend hold, this stability throughout the types of farmland out there, irrigated, non-irrigated, pasture land?
Yes. So across all 3 classes, irrigated, non-irrigated, and pasture, the percent change from 2017 to 2018 was generally flat. What we do see in small markets is the resiliency of high-quality farmland to holding its price. That's not necessarily the case for lower quality land. So a lot of people will tell me, well, I just saw a sale on an auction and something went for a really good price. Does that mean that my land market is really strong? And the answer to that is not necessarily. We'll always see, the occasional piece here or there that gets bid on by a couple of really competitive neighbors, but that doesn't necessarily set the market. Mm-hmm. It just indicates to us that the right piece of ground comes along, no matter what's going on. Sometimes there will be a need to bid on it and to try to buy it. But as we speak in generalities about the state, being flat is probably a good thing. Like I said, there's some resiliency in the market that we're not losing value on land right now. But how long this lasts, given the amount of, like I said, negative profitability that we've had, that's the question.
And hard to come up with a prognostication on that, isn't it?
Well, economists make weather people look good when we do our predictions of what's going to happen. But yeah, in terms of where land values are going, I think that we will still see a downward correction in land values over the course of the next 2 years unless commodity prices rebound, because we're still making adjustments on the side of producers who are trying to bring their cost of production down to meet these commodity prices. And as that adjustment continues to happen, we talked to bankers. There's a lot of restructuring going on this winter. There has been for the last year or two some restructuring, but this time it may start to involve selling off some parcels in order to pay off debt. And if you see too much of that push to sell off some ground, that all of a sudden can increase supply, and then we can have a totally different land market.
Speaking of rental rates, you're working on a new batch of rental rate trends in Kansas, which you'll be posting soon.
Right. So I like to publish a set of numbers that tells you what producers can afford to pay given average quality land and current prices and cost of production. It's not necessarily what producers are paying, but it's a look at what they can afford to pay. And it gives, especially producers and landowners when they're having that conversation about where rents are going, an idea of what the profitability is in the sector. And, we're probably going to have another year where the rental rates are setting below what they're paying on average, or what you can afford to pay is actually below what they are paying. And what that's signaling is just that there's not enough profitability in the sector to share the profits with both the landowners and the tenants and have everybody making money. What ends up happening is that if you're losing money on that rented ground, then the way that we make those rental payments is we subsidize it with money that we make off of owned ground. And we sort of rearrange those profits, and it gives us the ability to pay our rent.
What does this say, Mykel, as we go into, again, the winter season where there may be discussions between tenants and landlords on rental rates for 2019? Do those need to be reexamined by most parties?
I think most people, unless they've done it in the last year or two, but if they're renegotiating a 3 to 5 year contract, they absolutely need to look at new rental rates, just because it's been, about 3 to 4 years since profitability started to decline and things really contracted. So if your lease is, say, a 5-year-old lease, then yes, you're going to have to look at it. If you just renegotiated it last year, things haven't changed that much. You may not have to do much adjusting. But, the old adage is that rental rates never go down. They only go up. They're sticky is what that means. It means it's hard to negotiate them back down. I'm going to come back to the thing that I like to preach upon all the time, which is the communication between landowner and tenant, how much information you're willing to share with your landlord in order for them to really understand what's going on. And you want to share that information in the good times as well as the bad, so that they can have a good grasp of what kind of profitability we're actually talking about. I think even on the crop share side, farmers are losing money on crop share as much as they are, and some landowners are losing money on crop share as well.
But have the conversation. That's the point.
Have the conversation.
No matter what status you're in.
Exactly. Be talking, be in good communication, and keep that communication going throughout the year so that nobody is surprised by what you have to say when it comes harvest time.
And that rental rate trend information you're working up will be posted
before the end of December.
Be looking for that soon at agmanager.info. Before we let you go, Mykel, once again, another part of your duties to help analyze the options for producers as they would participate in the commodity title of the Farm Bill, which the 2018 version, of course, has been churned about, and maybe we're coming to the point where that bill will be finished. As far as participation in the commodity title, though, there's not a great deal of revolutionary change here from the previous bill, right?
Correct. As far as the commodity title goes, it's really the same ARC PLC programs that we're going to pick from. I anticipate we're going to have the same 5-year commitment. So you sign up for whichever program you want to be in, and that's what you're in on those base acres for the next 5 years or for the life of the Farm Bill. That's good in some ways because producers kind of understand what those programs look like. They understand, how they paid out over the last 5 years. But of course, we don't necessarily want to look backwards and trying to decide how we're going to pick which program we get into. We want to be looking forward. They're still based on prices and yields over the coming 5 years, and that's really hard to predict.
But the appeal of price loss coverage compared to the agricultural risk coverage seems to be a bit greater for some grains?
For some commodities, when we look at what the payout's going to, or what we estimate the payout will be in the first year, there will be a big payout under PLC, and you might, in all likelihood, want to pick that one. That's kind of how we did it last time, where for several commodities, ARC had a big first-year payment, and we decided to, take that bird in the hand versus two in the bush and just go with that ARC program because we knew it was going to pay out that first year. We might very well do the same thing with PLC and jump into PLC because we know we're going to get a good first-year payment. The reality is, though, that these government payments, they're helpful and they're nice to have, but there's so much uncertainty about whether or not you're going to get that payment, whether or not the conditions are just right, yields and prices, and we're talking about national marketing year prices, not your local elevator price. We're talking about county averages, not your farm yields. So we need to do as much work as we can to not rely on those payments for profitability as we can, and hopefully they're just gravy when they come in. There's all kinds of questions about how well those programs actually worked, and so I think we'll do some analysis also on how well they worked out, how they affected profitability, and again, just trying to decide, okay, what does that mean for what we go forward with?
In either circumstance, if there is a 2018 Farm Bill in place come 2019, or if there is an extension of the current Farm Bill, you and colleagues will be out on the meeting circuit once again to share your latest analyses of making those decisions, right?
Absolutely. We'll be out there talking to producers, sort of hashing through this decision, doing the best we can to help people out. We won't be able to make the decision for them. It isn't going to work that way, but we'll give them all the information we can come up with to try to help them make the best decision possible.
We'll pass along that calendar of meetings as they come along in 2019. And Mykel, thanks for coming over as always.
Oh, you're more than welcome, Eric. It was a pleasure.
Visiting there with Mykel Taylor, agricultural economist, K-State Research and Extension. And Agriculture Today will return with more on this, the K-State Radio Network.
Agriculture and food systems are the main drivers of the Kansas economy, but must be improved in order to feed the world's growing population. How are we going to do so? Reduce food loss, find ways to preserve grasslands, and help families stretch their dollars. Global food systems is one of the 5 grand challenges K-State Research and Extension is addressing. To learn more, visit www.ksre.ksu.edu.
Agriculture Today is back now. We're winding ever so steadily toward the end of the calendar year and looking ahead now to 2019 and decisions that you producers will be making on a number of farm enterprises, not the least of which your crop production intentions for the new year. There's information that's been freshly posted on the agmanager.info website that hopefully will help you producers walk through the economics of those cropping enterprises. And joining us now, K-State Research and Extension agricultural economist Gregg Ibendahl, who was largely responsible for assembling all of this. This is, an annual series of crop budgets you put together, Gregg?
Yeah, the crop budget is one of our basic planning tools that we use with producers and lenders and other interested folks out there. It kind of gives you a starting point for building a farm plan. What a budget really does is it shows you what the expected revenue, cost, expenses for a crop, and then we can estimate what the profitability per acre is based on what our budget is.
And you are trying to canvass as many crops as possible with this series, right?
Yeah, we try to cover all the major crops and most of the minor crops in the state as well here, and we try to develop a budget for each of the different regions across the state. So like corn, for example, we'll have at least 6 budgets across the state, and we do both a dry land and an irrigated version for all the major crops.
Well, the central components of these budgets, and they're the sensible things, right? Things like input costs, so forth?
Yeah, there's really two main sections, the revenue and expenses. So we're looking at, some projection of what yields are. So we're looking at kind of what the history is of yields in the different counties, along with some expert recommendations from our ag agronomist for that part of it. And then Dan O'Brien here in the ag econ department, he gives me a projection of what he thinks grain prices might be. So that gives us the revenue side. And then on the expenses, we have several sources for that. So we get our fertilizer information from DTN for fertilizer prices for the year. We have all our input prices, which the agronomy folks provide for us. We use those. And then sources for seed and things like that. So combine it all together and we get a revenue section, an expense section, and what's kind of left over then will be our expected net revenue.
And you, again, go with certain yield assumptions based on historical patterns in that given region?
Yeah, so when you look at a budget, even though we are breaking it into 6 regions in the state, that's still kind of an average for that particular reason. So if a producer is going to use these, definitely they need to adjust this for their particular situation, because we can't really tailor a specific budget just for that producer. So we kind of give an average for that region, and then producers really need to adjust that for their own farm situation.
But this gives a framework and a notion of where those budgets might stand for individuals.
Yeah, at least as a good starting point. And again, some of the things, expenses, things like for fuel and seed and fertilizer costs, those things should be pretty accurate based on how much you're applying. So there's not so much need for the producer to adjust those, but certainly an expectation for yields, I think, would be the main thing they would want to look at.
Well, Gregg, we're talking in general terms here, but we might compare those variables that are in effect here in these budgets to how they looked in the 2018 budgets, and if you've seen any major changes from one year to the next.
Well, on the revenue side, I think we're looking at kind of a different mix of grain prices. So I think the biggest change this year from last year is that certainly soybean prices have projected soybean prices are going to be lower. So that makes soybeans less attractive than what they were last year. Last year, soybeans was probably the one crop that really, producers had a pretty good chance to at least break even on. This year, that's not quite the case. So soybeans really don't look any better than anything else. So that we may see a mix or switch maybe outside from soybeans back to some other crops because of that. Looking at the expense side, some of the expenses are about the same. We look at a lot of the chemicals for weed control, insect control. Those are very similar to what it was the year before. Machinery, haven't really noticed that big of a change, maybe a little bit due to inflation, but not a whole lot. The biggest expense change, though, will be on the fertilizer costs, where we've seen a big jump up in nitrogen for last year. If we look at the history of fertilizer prices, they have been declining for about 3 or 4 years at least. So 2018 was really a low point for a lot of fertilizers. They're going to climb back up this year. Some of the fertilizer prices I've seen for nitrogen-based products are probably $100 a ton higher than what they were last year. So for those folks who are going to plant crops that are heavy nitrogen crops like corn, that's going to be a big increase in the fertilizer expense.
Right. Do you compare things like general cash flow and the market swings that we see typically from year to year?
Well, Dan O'Brien, who gives me my estimate for grain prices, he takes a lot of that into consideration when he's looking at a projection for grain prices. It's kind of hard to predict a year in advance, but he does his best for that. So, that's our best estimate for, we think, going forward. Some of the other expenses, we kind of look at what they are and make some idea of what they might be going forward as well.
It's dangerous to say which crop looks most profitable based on the budgets, but you hinted that soybeans, well, if prices don't improve dramatically, do other crops step up and look better then? One has to make those judgments for themselves.
Well, I wouldn't say soybeans are necessarily at the lower end. I think they're more competitive with the other crops now. Last year, to me, looking at kind of the budgets in general, it looked like soybeans were kind of a clear winner when you compared to the other crops. I would say this year that's not the case. I'd say soybeans kind of fall in the mix of all the other crops. So
they came back to the pack.
Yeah, exactly. They're kind of more all evenly based, which in this case is probably not necessarily a good thing, because you look at our budgets, and if you're trying to cover all costs, that's going to be a tough thing to do next year.
And we do need to keep in mind certain caveats. For example, if something shifts in a market like soybeans, if the Chinese tariff issue, for instance, would be resolved and we see a major spike in prices, well, all of this changes then. But we're going with what we know now.
Yeah, we're kind of giving our best estimate of what they think we are now, but certainly a thing like that with a change in trade situation can make a big difference in price, and that can make a big difference in profitability.
All right. Well, producers can go on to the agmanager.info website even now and have a look at these budgets and walk through them, associate which ones will suit their operations and their enterprises the closest. You have these in 2 formats, you say.
Yeah, there's both just a plain PDF file, paper copy to look at, and then we also, for those folks who want to do more interactive and what-if type scenarios, we do have some Excel versions, too, up on the web that allows you to change specific inputs. You can change prices, and you can get an idea of what the budget would be for your particular farm.
So you can make maximum use of either of those, whichever one suits you, but in particular the opportunity to put in your numbers and to match things up is very valuable here. Gregg, again, talking broadly, but it's highly critical in many instances for producers to scrutinize their budgets quite carefully heading into 2019, given the tightness of the economics right now, correct?
Yes, and that especially is going to be important this coming year, because if we do maybe see a switch out of maybe some soybeans back into corn or something like that, that's going to make cash flow an even bigger issue for this coming year. So, soybeans are a fairly low-cost crop to grow compared to something like corn, which has a lot more fertilizer use. So, if, producers should use this definitely for their own farm to see what their cash flow situation is going to be, but definitely something to use with lenders when you go and talk about operating loan, because if you do decide to make a crop mix and grow crops that are more expensive to grow with expenses, then you're going to have to maybe look at a bigger operating loan. So, probably the more heads up you can give your lender for something like this, the better.
The prevailing thinking is that lenders are going to eye those budgets closely with producers. So,
yeah, I would say in any year like this where it's going to be a tight situation as far as profitability, I think lenders are really going to watch budgets and look out to see where their money is going to go in the whole thing as well.
You bet. So it's as easy as producers going to the agmanager.info website, and there's a handy link there?
Yes, there should be. There should be a section for both irrigated and then one for dryland crops, both there.
So you look for, very simply, 2019 crop budgets that have been formulated for you producers to use heading into this next calendar year and the forthcoming growing season. Gregg, thank you. Good work as always, for it takes quite a bit of labor to assemble all of those numbers, and we appreciate your time right here.
Well, thanks.
He is Gregg Ibendahl, agricultural economist with K-State Research and Extension. Again, quite a suite of 2019 crop budgets for Kansas conditions for the various regions in the state, and obviously for the variety of crops that you can opt for, producers. Just freshly posted at the agmanager.info website. And, by the way, while at that site, take the time as well to have a look at another feature of use to you crop producers. This is an interactive crop basis tool updated regularly by the agricultural economics team at K-State. You can use this to examine historical, weekly, nearby basis for corn, for grain, sorghum, soybeans, and wheat at various locations, not only in Kansas, but in surrounding states, Nebraska, Missouri, Oklahoma, parts of Colorado, and Texas. You simply identify the location you're interested in, select your grain commodity, select a year to evaluate that, or choose a range of years, and then you can generate a report of data, either in tabular form or in chart form. That basis is calculated by subtracting the nearby futures price from the cash price posted on a Wednesday. The nearby futures contract price in this context defined as that contract closest to expiration without going into the delivery month. To fill in the technicalities there, of course, basis is an excellent indicator of the effects of local grain supply and demand, transportation costs, commodity prices themselves, and so forth. So, crop producers, make that part of your management routine. Once again, analyzing your local grain basis with this interactive crop basis tool. The link to it right there on the front page of agmanager.info. And you're listening to Agriculture Today. Now this break, we'll be back afterward with our next guest, who will tell us more about a just-announced major boost for a number of rural hospitals in Kansas communities. More on that in a few minutes here on the K-State Radio Network. Stay with us.
What is radon? Home exposure to radon gas is the leading cause of lung cancer death in the United States for non-smokers. In Kansas, 1 in 4 homes will test at or above the EPA action level. The Surgeon General recommends all homes be tested and fixed if necessary. Visit kansasradonprogram.org for more information. Test, fix, save a life. This message brought to you by the Kansas Radon Program, the Kansas Association of Broadcasters, and this station.
Agriculture Today is back now here on the K-State Radio Network. Over these next few moments, we'd like to cover the details of news that came out just late last week out of USDA Rural Development here in Kansas. And it's in support of rural hospital services in the state to a very impressive extent. We'll get into the details now with the state director of USDA Rural Development, Lynne Hinrichsen, from her office in Topeka. Lynne, this is quite important news, isn't it, before we talk any further?
Oh, definitely. This is really going along the Secretary's mission and priorities of keeping rural areas prosperous and sustainable.
Right. And we all know about the questions of rural health availability. That is a huge issue not only in Kansas but nationwide.
Yes. We know that as some of our rural areas are shrinking in population, there has been a number of hospitals or healthcare clinics that have closed, and this is just one way of us being able to help out either the existing hospitals and healthcare clinics or possibly adding some funding to building a new facility.
So right to it, and this was announced last week that the USDA will in effect be investing $34 million in 5 rural Kansas hospitals. And this is by way of a loan program, technically speaking, the Community Facilities Direct Loan Program, correct?
That is correct.
Well, let's share the news about the 5 hospitals and what they'll be receiving and to what end that money will be invested. There's one in Marysville, north central Kansas, that will be a recipient, correct?
Yes, that's through the CMH Foundation. They're receiving over $9 million in loans, and they are acquiring the healthcare center there, which is a critical access hospital in Marysville.
And this will basically help ensure that that hospital stays open, in effect, right?
Yes, the foundation, the CMH Foundation, again, is a nonprofit organization that was focused in 2009 to support healthcare in Marshall County. And this project will help ensure that the hospital can continue to serve the area's 10,000 residents. And we hope to look at additional funding is going to include over $6 million from Community Facilities Loan Guaranteed Program.
Very good. But this is a major infusion to help that hospital keep its doors open to those residents in Marshall County, in Marysville. Jewell County and the hospital there also a recipient. What's the story there, then?
The story there is Jewell County Hospital is receiving a $7.5 million loan to actually renovate and expand their critical access hospital in Mankato. This expansion project is going to include a new main entrance, the emergency department is going to be expanded, and the renovations will include a new building and serve over 3,000 residents in that area.
And that hospital is also in line for potential additional funding, you note.
Yes, over $500,000 from USDA's Community Facilities Loan Guarantee Program is going to be looked at to include in getting those renovations completed.
Again, that's happening in Mankato, Jewell County. And in northeast Kansas, a community hospital will be receiving likewise one of these loans soon.
Yes, the Rural Health Resources of Jackson County is receiving over $14 million in loans to expand and renovate the critical access hospital in Hoeven. The 2-story rural health clinic is going to be built adjacent to the current hospital and therefore expand services there. Updates to the hospital facility are also going to include renovations to the emergency department, inpatient rooms, some specialty clinic, corridors, and a new roof.
So it'll be a makeover of current facilities and an addition with new facilities. And once more noting there'll be potentially further support from the USDA for this hospital as well.
Yes. Community Facilities Guarantee Program will look at an additional $2 million, and then a $1 million applicant contribution is going to be added to that funding. Again,
in support of the Houlton Community Hospital. The last 2 hospitals on this list are further west in Kansas, one in the northwest part of the state. Sheridan County, what's happening in Hoxie?
Sheridan County is going to receive a $2.25 million loan for improvements to the critical access hospital at the Sheridan County Health Complex in Hoxie. Patient rooms and restrooms will be remodeled to obviously bring them up to accessibility standards, and also the plumbing and electrical systems will be replaced. That hospital itself serves over 2,500 people in that area.
And lastly, in Wichita County, west central Kansas, the Community Health Center there will be receiving much-needed infrastructure improvements.
Yes, Wichita County is receiving $760,000 loan for their new heating and air conditioning system, which will be at the Wichita County Health Center, and that is located in Leota. The existing system just has exceeded its life expectancy. It was just too expensive for them to maintain. So that loan is going to be able to help them renovate and put in a new system, and then again affecting over 2,200 residents in the Leota area.
So again, 5 communities, Marysville, Mankato, Holton, Hoxie, and Leota, and their hospitals in those counties will be receiving various levels of loans from the USDA Rural Development Program and specifically the Community Facilities Direct Loan Program. If one would like to know more in as far as what USDA Rural Development can do in support of those services, they can inquire by going through your office or go online, can they not, Lynn?
That is correct. Our contact number here at the state office in Kansas is 785-271-2700, or they can feel free to visit our website at www.rd.usda.gov/Kansas.
Excellent. And as the state director, you're very enthused about what is developed here with these 5 projects.
I am very excited to be able to help with our whole rural development team, be able to offer some of this funding to the well-deserving areas within Kansas. It's our goal that we want to ensure rural Kansans have access to quality medical care. It's close to home. That's a top priority. And there are just several of the hospitals that are aging that we are committed to assisting these communities keep those hospitals up and running for the rural residents.
Well, congratulations, Lynn, to you and your team for helping to secure this important support for our rural health services in Kansas. We appreciate your time right here.
You're more than welcome. We're here to serve.
She is the State Director of USDA Rural Development, Lynne Hinrichsen. Once again, the USDA, through Rural Development and the Community Facilities Direct Loan Program, investing $34 million in 5 rural Kansas hospitals. If you'd like to know more, go to www.rd.usda.gov/KS. And we'll be back with more on Agriculture Today.
Have you ever thought about where your food comes from? If you're thinking the grocery store, think again. Facts show that the American farmer feeds more than 129 people.
They are continually increasing and improving their operations. A wide variety of crops and livestock are grown in Kansas as well as the United States, providing food to your dinner plate.
Next time you see a farmer or rancher, thank them. For more information, contact K-State Research and Extension.
This is Agriculture Today. Stop, look, and listen. This is our state, Kansas.
The day before, I had opened the wire gate, so we drove straight to the wooded spot.
That's Gus Vanderhoeven of Kansas State University with comment on life in rural Kansas.
We've done this before, and last Friday, the weather could not have been better. A perfect fall day to cut firewood. He needed dry wood, and I had plenty of trees which had died that were still standing or had fallen. There was one patch which I'd wanted to clean up. I'd wanted to do that for a long time. I suggested we would drive both trucks and load both to make a good day and enjoy the time together. His son came along, which would make a big difference, as cutting and loading would go on simultaneously. We would make a good team. At the farm, we drove through the creek crossing and along the edge of the hay meadow, cleaning up a couple of trees as we went. Those trees had died and fallen over into the field and needed to be cut. Then we drove on to the wooded patch I wanted to concentrate on. There was another bad crossing where the road had eroded, but one can pass it driving carefully. There's always work and maintenance to be done. If you have a good skid loader, you are in business. The day before I'd opened the wire gate, so we drove straight to the wooded spot. We backed into the trees so that loading would be easier. Then we switched the engines off, and all was silent, just very quiet and still. Warming up, we shed some jackets and could shed more as the work progressed, finishing up in just work shirts. Our chainsaws started again. Noisy machines they are, but they're handy to get a lot done. Steady work filled the truck beds. This was dry, dead wood, and that was wanted. With no wind and the sun shining, work was a pleasure. We kicked logs and branches to see if they were solid, as some wood had been laying there for years. There were several Osage orange trees, some of which would make perfect fence posts. Good to know for future use. Fallen trees had attracted the pack rats, which had made their nest off the ground. I expect coyotes to come and clean them out when winter gets rough. It would be for them like going to the grocery store and to the meat department. Chainsaws kept roaring and cutting, and Chris the son kept loading. Then I started cleaning some of the lower cedar branches and started brush piles to burn when we would burn the range. With the patch burning program for the coming season, the 1/3 patch would burn along and into the small woodlot we were cleaning up. As I pulled branches to the piles, I kept looking for sheds, dropped antlers from earlier years. Years ago, when looking in the same location, I found one hanging in the shrubs, rough-leaf dogwood. A small one, but a shed nevertheless, and I saved it. I made 3 brush piles while they filled one truck with good firewood. We never got the cutting and load for my truck to be taken to their house, as we sat down on the tailgate and enjoyed homemade bread and coffee and water. Cool, clean water, also a gift. By the time we were ready to start again, we realized that for them there were still other things to get done that perfect fall day. So, with one truck loaded, we called it a day. I felt like going on, but it was their day, so out we drove across the creek again and up the steep bank. As friends do, they thanked me for the wood and would come back to help with work. But they already had, so I thanked them. We had a great morning and made a good start. We enjoyed the fellowship and telling stories when we rested. A perfect day with friends at a beautiful location. When we drove out and crossed the big field, I saw a big buck come out of the woods. As he saw our trucks, he turned and disappeared. I watched him go, in no real hurry. At the gate, we decided to each go our way. They would go home and do the things they needed to do. Driving behind the loaded truck, I thought about my friends in front of me. They had thanked me again. But what are friends for? And I have the wood. It really was a perfect day. Then I thought to help them see how much I enjoyed the day. I'll explain with an analogy. So I emailed my friend and I said, "Okay, just think for a moment. Imagine you and your family have moved to France. You've lived there for several years, and you do speak the language, but it's not where you were born or grew up. There you own a small farm with woods, and French friends from out of town come out to the farm to get a load of firewood. Of course, you got the woods. And clearing is an ongoing job. But now you spend the morning with friends enjoying what you do. When France is not your own country, but now is home, you feel very lucky to have friends to share part of the day with, and the land which is yours to take care of. As you work together, you can explain things to a native son, which he did not know. So you feel even more to belong as a newcomer. It was a good morning. We cut a good load. It should keep their hearth burning well into 2019. And if not, there's plenty more to cut.
Gus Vanderhoeven of Kansas State University with his weekly commentary on rural Kansas. That's today's edition. We'll be away for the holiday break in the next 2 days. Please rejoin us right here on Monday. Until then, happy Thanksgiving to you and yours. Eric Atkinson for Agriculture Today over the K-State Radio Network.